Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, having managed to recover in front of the 60-day simple moving average, the Australian dollar closed slightly higher Wednesday in New York following the FOMC minutes, which revealed mixed views on rate cuts. Most officials favoured a wait-and-see approach, with a September cut likely and a July cut deemed very unlikely due to the recent 4.1% unemployment rate released last week. The tone was somewhat hawkish, citing inflation risks from tariffs despite softer data. Along with that, the Reserve Bank earlier in the week surprised traders by keeping its rates on hold at 3.85% and with a 6-3 vote to keep the cash rate on hold. Looking at the technicals, we have firmed up somewhat to the bullish side with the RSI breaking through the midway point. So we are focusing back on the level around 65.60 or even to 66 cents and see how the market plays from there, because the last four attempts did show supply. The dollar index remains steady at 97 figure. Any pullback support is viewed around 64.9095. The euro was a little bit mixed, but overall increasing slightly to the upside. And looking how the market portrays, I still feel there could be a rally to 118, and any weakness limited towards 117.20 or even towards 116.70. Well, looking at dollar yen, the market finally found supply again as the hesitation towards the topside area around 136, 137, Japanese yen strengthened or attracted renewed safe haven demand amid rising geopolitical tension and tariff concerns. These tariff worries may further boost the yen and weaken the US dollar by refocusing markets on expected rate cuts as well after the FOMC minutes. It's a bit of a toss of a coin when it comes to July or September, but we might find with Trump pressuring the Fed, could be July. Nevertheless, the topside rejection from the technical side has buckled the technicals, so therefore I'm looking for a pullback towards 145.60 or 145.25, and any advancement again likely to find supply returning around this topside area of 146.5 to 147. Turning to sterling, well, a little bit of a recovery here. As we can see, the indicators have bounced slightly and still maintaining its upward trek as the trend line holds to around 137 to 138. Any weakness should find support around the 135.45.50 area as main and 135.70 as minor. And wrapping up with commodities, safe haven interest returned to the yellow precious metal on Wednesday as the price rebounded from the trend line. Well, just that is. And nevertheless, still keeping an eye on how this market portrays. I don't want to get too negative, just in case we see that rally. And being back above 3,300 could again find an unexpected move towards the top side area around 3,350, with support seen around 3,296 to 3,303. And finishing off with oil, well, the market's still stabbing that top side area around 67.5 to 68, and also a 2-week high and also the target since the bounce from the bottom side of this $64 range. Overall, I'm a little cautious just in case we see more profit taking and a pullback towards a region of 65, 70, 80. Well, that's a wrap. Thank you for joining me. And as always, look out for the interest rate report. I hope you enjoy the great start to the day.